Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So I'm just back today with another helping hand style video for those of you who are new to trading, new to spread betting and or new to the IG platform itself. And the aim of this video is to walk you through and explain what spread is. But before we dive in, I just have to emphasize this. I don't work for IG. I'm in no way affiliated with IG. They're not paying me for this whatsoever. If they were, I'd tell you. And if you're wondering, well, why are you using your valuable time then? Why even put these videos together? They actually stemmed from a trader and now a friend who was new to the platform and who was asking me about, how to do X, how to do Y and so on. And I said I'd put some videos together for him and I thought, look, if I'm going to put them together, I might as well share them publicly via the YouTube channel to hopefully help others as well, because I know there's going to be people out there asking the same questions, wondering the same things, and so on and so forth. So there you go. Anyway, let's dive in. So it's only going to be a fairly short video today because spread, it's not an hour-long video kind of worthy topic. But if you're using a spread bet account here in England, rather than paying a commission, i.e. let's say £1 per trade that you place or whatever fee, you pay what's called a spread, which is the commission charged by a spread bet account provider. And the spread is the difference between the bid and the offer. Now, the spread changes based on markets, okay? And typically, and to keep this really simple and beginner friendly, the more popular the market, the lower the spread. So as an example, let's take the euro-dollar currency pair. Now, it's one of the most liquid markets, i.e. one of the most actively traded markets in the world, and thus the spread will be lower on this market because of that. And on the other side of this, if you look at perhaps unusual, lesser known stocks, the spread will tend to be higher on these markets and so on. So when and how exactly do you pay the spread? Good question. When you place a trade on a spread bet platform, you'll notice that your position always opens up at a loss. And that's because you've paid the spread, i.e. the commission, upon trade execution. So when you take that trade, you pay the spread and then you're actually placed in that trade as your broker executes for you. So as a really simple example, let's say that the spread on the FTSE 100 is 1 point. Okay, and the current market price is 65.45 spot 5, meaning the offer price would be 65.46 and the bid price would be 65.45. The difference between these is, of course, the spread, which is in the middle. So if you buy the market, you pay the offer price, which will be 65.46. And if you sell the market, you pay the bid price, which will be 65.45. The mid price being, again, in the middle at 65.45 spot 5. So that's how spread works and is actually incorporated into current market price. And again, the spread will vary by market depending on liquidity. Another thing I should add actually is the fact that brokers can and do change the spread at will. So for example, they might bump it up going into or coming out of a news event. They might bump it up during increased volatility and so on and so forth. Now, I hope that helps, and I know it might sound a bit overwhelming if you're brand new, but if you have to, give this video a rewatch one more time, and if you do need any help, either drop me a comment or an email, and if I do have the time, I'll get it answered for you, or alternatively, you do of course have IG support who can help with this too, and again, I don't work for them, so really, IG support is probably the best place to head if you are still stuck with this. Also, one thing I should add as well, if you are a newer trader, my advice would be don't start with real money. There's no need to dive in, head first, straight off the bat, risking live capital. Pace yourself. The markets aren't going anywhere. They're still going to be here in a week, in a month, in a year. Well, unless the world comes to an end, of course. So begin via demo first, and then at least you're not risking live capital. Just Go slow and steady, one step at a time. Practice first, and then when you become proficient and when everything makes sense to you and you're seeing results, move over to real money. And yeah, that's a great time to then take things a little bit more seriously and step on the pedal, so to speak. Anyway, I hope that's triggered some inspiration. I'll leave it there for today. But as always, trade with Edge, with consistency, and I look forward to having you back here on the channel soon. Thanks, everyone.